Welcome back to another episode of Mailbag Monday by the Money Matters podcast. Who's on that podcast, you might ask? Well, for one, I'm your host, Jack. And for two and three, I've got my father, Bill, and my best friend, Dylan. Per usual, on these episodes, we kick it off to my dad, Bill, a.k.a. Dollar Bill. See, I'ma tell you, like Wu told me, Sats rule everything around me, singing dollar, dollar bill, y'all, dollar, dollar bill, y'all, dollar, dollar bill, y'all, dollar, dollar bill, y'all. Bitcoin almost hit 70K this weekend, but open Monday now down to 67K. We're still ranging in the 50 to 70K range, but boy, are we up close to the top of that. People are feeling a little eager that we're going to break up to new all-time highs. Dollar Bill, do you agree, disagree? Why is the market moving? Is it moving? Should we be excited? Should we be scared? What do you think?
Oh, my stance is the same as it was last time, same as it's been all year. We think if it's priced in dollars, you should be trading it from the long side. We think there is too much debt. All fiat economies are prone to inflation and to asset inflation and too much debt. This one just went a little bit off the rails the last years. Any chart, whether it's M2 or gold or any asset, kind of looks like this, right? In the last couple of years. I continue. I'm going to, let the market. What I usually do at this point is I support my fiat debasement asset inflation argument by listing, any asset I can find. I usually use the Dow, gold, the Case-Shiller, real estate index. Luckily for me, somebody did it for me. I'm not kidding. I was going to do my notes, whether this is up 30%. A week ago, only I like this. This is a year-to-date Bitcoin, gold, S&P index. Hey, somebody's doing all the charting work for me. Bitcoin year-to-date is up 55%, gold up 37%, S&P up 24%, and monetary authorities have achieved, those are startling gains. And we have achieved that with a US CPI year-to-date, year-over-year, up 2.4%. The last CPI number was 0.2. That was in September. We got 14 days until a tightly contested and potentially violent election. The predict org still has, pretty much within the margin of errors, although Trump is leaking out to a slight lead. But I just use the election as one more justification for how monetary authorities are not going to insert any discipline. Normally, if I'm in charge, right, of protecting the purchasing power of my currency, I would be alarmed by a 38% year-over-year increase in the price of gold. I would say it's a matter of time until all of this monetary stimulus starts hitting the CPI. But like I said, it hasn't so far. You're 2.4% year-over-year inflation. I think we are only inflating the good assets as far as I can see. We're not inflating the troublesome ones. I don't think this needs a policy response. I think markets are on their own. When markets are on their own, as you know, they like to go higher. So I'm still trading everything from the long side. 14 days until the November election. As discussed, there are two ways to approach a market that is an event market, whether it's a crop report, in this case, an election, a big economic data point. I say, unless you've got some particular insight into those numbers, which most economic numbers, as you know, get revised frequently in the near term, and then every once in a while get benchmark revised all over the place. So unless you got some particular insight on how to trade around these numbers, I don't have any problem with either or. I was at either even up and take a look at this market with fresh eyes, around the end of the year, or just continue to trade as you have. I think most feedback I get is that people in a volatile market like this, people just like to DCA their way into a position. I don't have any problem with doing that also. Either even up and avoid the volatility that's going to hit around election season, or just trade through it. Either way, there's nothing wrong with evening up after a year. What right? But the Dow's up 30%, and just enjoying the volatility from the sidelines. That's probably the way I would lean. But like I said, either trade through it, um, but or yeah, really just try to ignore it. The dust in this will settle, but boy, it does look like we got some volatility coming in the near term.
We sure do. Do you buy into Trump or Kamala being more beneficial for markets? There's a lot of talk that Trump wins, everyone's rich, Trump loses, everyone's poor. You buy into that?
No, I mean I like any decent Bitcoiner. I prefer to have nothing to do with politics. That's one of the things that attracts you to Bitcoin. um, is I'll go with the mathematical monetary policy and not the Council of Elders that is going to try to nuance their way around this situation. Um, do I buy that Trump is better for markets in general? I think all markets always in general, like Republicans better. They are considered more budget wise, responsible, but and then go ahead and try to justify that because I think the last time we actually balanced the federal budget deficit was under Bill Clinton, right? I mean, there's just no, and where we really blew out. I mean, everybody loves if you're a Republican, everybody wants to relive like the Reagan era. It's great for business and assets, but not good for budget deficits. Reagan ran huge budget deficits. They just didn't manifest in, a weaker dollar or higher inflation or anything. But as far as do I think, a Trump win is going to solve? No, I just don't. I don't see that there's really going to be a much material difference in terms because I mean you just are going to have to debase print. There are right two ways out of spending more money than you got. You can either tax us, and that just does not seem politically feasible right now. So I think debasement is you're going to have to. I think monetary authorities are going to accept whatever their target is, 2.5. 3 or 4ish is going to have to be okay with this amount of fragility and liquidity risk.
I tend to agree. I don't think it matters who wins. Bitcoin's got to go up because the dollar's got to go down. Bitcoin's got to go up. Yeah, Bitcoin's got to go up the most because Bitcoin is the hardest thing to make more of. So it's pretty simple. I would like my government to free Ross. I would like my government to buy Bitcoin, but I don't think it really matters. To be totally candid, in the long term, low time preference over here, mathematical monetary policy. And I'd just like to see Ross free. I'd like to see the United States support businesses like Strike in our industry. But I think the dollar's got to go down, so Bitcoin's got to go up, and Bitcoin's got to go up more than anything else because it's the hardest thing to make more of.
Well, but Bitcoin's the hardest thing to make more of course, unless, of course, you're talking about silver, the true hardest thing. Good Lord, what is going on with that market? I don't know. Do I have a silver chart around here somewhere?
I know commodities, ever since China started to react to their economy struggles, commodities have been trading.
Silver costs $34 an ounce.
Yeah, I mean, as you say, listeners to our show, every time I run into a listener of the show, everyone's favorite is get long, get paid. It's not get long, get rug pulled. It's not get long and get poor. It's get long and get paid. So if you own any asset, you're getting paid. You're gonna get paid the most if you own Sats. But yeah, silver counts too.
A year ago.
Harder to make silver than fiat. That's true.
Yep.
Yeah, silver we're looking at was about it looks like about $23 a year ago is now 34. Yes, the hardest asset, the second hardest asset in the world is Bitcoin, but evidently the hardest is silver. I don't know. I don't know. I was saying Elon to grab a meteorite with a bunch of it, right? He's always talking about grabbing one with 5 tons of gold. There's got to be one. There's got to be a silver meteorite out there. We can solve that problem. Uh, yeah, that's.
I mean, if the price gets
I
high enough,
agree with
we'll
you.
find it.
I will take the asset if I want to store my wealth and protect it from the what seems like overt taxation going on through this debasement mess. Um, the hardest, I'll pick the hardest asset is Bitcoin. I know exactly how much of it there is. I know what the issuance schedule is. I know how much more is coming in the next day, week, month, 100 years, right? All the questions that you don't know if you're storing your value in a precious metal. That's what I always say. When you Google how much gold there is in the world or how much silver there is in the world, Google will return an answer with a plus or minus estimate of millions of metric tons. I don't even know how many ounces are in a metric ton, so I can't even do that math for you. But yeah, you're storing value in something with a plus or minus estimate of 20% of the existing supply. In Bitcoin, you know exactly down to the quarter of right of a coin, how many are extant and how many are coming. It's just a lot easier to store wealth. I mean, it's just a much stronger wealth preservation argument.
Well, you heard it here first, folks. Silver's harder than Bitcoin. I think that's a good segue into the agenda for the week. Really, the theme of this week is scorching hot takes. So we heard some scorching hot takes recently from Michael Saylor, the ECB, as well as the Minneapolis Fed. Uh, I'm going to start with Saylor, and I'm curious your two's opinions on his scorching hot take of the week. I'm slightly paraphrasing here, but the gist of what Saylor said on an interview recently is as follows. Quote, I think that when Bitcoin is held by a bunch of crypto anarchists that aren't regulated entities, that don't acknowledge government, don't acknowledge taxes, or don't acknowledge reporting requirements, that increases the risk of seizure. And so the question that I have here is, in your opinions, is it more dangerous to have Bitcoin held by unregulated, non-compliant entities, as Saylor suggests, or does the real risk lie in centralizing custody under regulated entities?
Yeah, I mean, I got some comments on this one. First of all, calling self custody crypto anarchism oversimplifies Bitcoin's innovation to empower the individual. Bitcoin's not about rejecting the government. From the highest form possible, Bitcoin is information. Bitcoin is text. Bitcoin is about free speech. Bitcoin is about property rights. Bitcoin is about the freedom to manage your own money, your own property, your own time, your own energy, your own labor, effort, your own future. The point is that you get to decide for the first time ever in human history, especially in modern human history, whether you want to trust and rely on anyone to store your time and energy, your money, your effort, your labor. It's not. It's drastic oversimplification to call it crypto anarchism, to elect and decide to take no counterparty risk to store, save, and exchange your labor, effort, and future. So that's for one. For two, I think the comments around gold and the executive order. Listen, if the gold executive order was voluntary, it would have been it would have been an executive suggestion. It wasn't voluntary. It was an order. It was an order backed by enforcement. I think it's a little dangerous to claim that it's paranoia from the people that they're concerned that given economic crisis, government will overreach and extend its enforcement to protect its power and monopolies. I think that people's concerns there are grounded in history, and biasing people's perception of history I also just disagree with that. And I think overall, my take here is what works for Saylor and his shareholders, or what works for JP Morgan and Jamie Dimon, or hardware manufacturers, or Bitcoin core developers, is what works for them. And we should never imply that it's what works for everyone. Bitcoin is about protecting the freedom of choice. If we lose that, we've lost everything. Bitcoin is about electing how you want to use money and how you want to subscribe to this distributed monetary policy. At the end of the day, Bitcoin isn't backed by energy or code. I think in many ways, Bitcoin's backed by people. And I think the reaction to Saylor's comments is because there's a responsibility here by the network. I'm speaking as a node on the network to protect everyone's right to use Bitcoin how they want to use it. So I don't have any problem with Saylor wanting to use Bitcoin how he wants to use Bitcoin, or how MSTR shareholders like to use Bitcoin by buying in equity on the stock market. That's fine. But implying that people that want to use it differently, especially electing the unique decision Satoshi enabled all of us of using it without any counterparty risk, using it in a self-sovereign way as crypto anarchism, and that we're built with stems of paranoia and fear of having counterparty risk. I disagree with that. There's no need to imply that people are bad and to dismiss people for wanting to use Bitcoin self-sovereignly. And the last thing I'll say before this gets clipped and posted to the internet is I'm not attacking Michael. In fact, I love Michael. I consider Michael a good friend. I think Michael's been amazing for Bitcoin. I think he's brilliant. He's a one of one. I think this is only the only free market in the world being free. That's the way I'll put it. Like, look, in any free market, especially in something like Bitcoin, people are going to have different views. So there's a lot of comments on the internet of, I just think as Bitcoin matures and new entrants come into the network, people are scared to disagree and voice opinions. And this is a free market being free. It's healthy. It's not only healthy, it's Bitcoin. This is the only truly free market in the world. And so people are going to disagree on things, but I think it's important. It's a drastic oversimplification to call self-custody crypto anarchism. It has nothing to do with rejecting government. This is about freedom of speech. This is about property rights. This is about the right to manage your own money yourself. And then the executive order was an order. It wasn't a suggestion. So that's what I would say to my friend Michael. And knowing Michael, I don't think he'd disagree with that, honestly. I mean, I've been in these interviews too, by the way. I've been in a lot of media. Things are taken out of context. Things are missaid. I mean, Saylor said 10 million words about Bitcoin. He's bound to have potentially misspoke or positioned an argument a way that is going to be misinterpreted on the internet. The Michael I know, I'd be shocked if he disagreed with much of what I'm saying right now. And even if he did, again, that's adults acting in a free market. But Bitcoin is a collection of distributed humans all over the world. One of the responsibilities we hold in upholding the network and protecting the network is ensuring that people can use Bitcoin however they want. And if we diminish and lose that property, we've lost the innovation that Satoshi gifted us. My thoughts.
Do you think that so you touched on he drew the comparison to gold, which was, in his opinion, turned in voluntarily, not forcibly seized. Do you think governments could implement a similar scenario with Bitcoin, where holders are pressured to hand over their assets?
Can governments use violence against their citizens? Yes. I mean, they can. Is Bitcoin the best system we've designed to date to resist that threat? Yeah. We've talked about this on this podcast a lot. Bitcoin differs tremendously from gold because its distribution to the people. Gold is concentrated with central banks, corporations, government. I think half the known gold supply is held by centralized entities. And for that reason, it's easier to manipulate the price. It's easier to enforce regulation. It's easier to confiscate. Bitcoin was distributed to the people through a mailing list, and I think it's 2 to 3% of the Bitcoin in existence, which we do know how much of there is of supply, is held by government or central banks. And so that the reality is the fact that we can self-sovereignly hold the asset is what protects it from any form of manipulation or confiscation. And again, Bitcoin is simply information at the end of the day. We're talking about transaction hashes. We're talking about these are strings of data. So we're talking about properties like freedom of speech, things like property rights. So you want to confiscate Bitcoin? You want to confiscate 12 words in my head? You want to confiscate a piece of my memory? What are you going to open my skull and slice a piece of my brain out? So I think, I mean, and again, Bitcoin is a free open system. So if Saylor or anyone wants to use it in any way they want, that's exercising the gift Satoshi gave us. But to dismiss someone else's right, I think is wrong. We should just be very careful with that language, especially dismissing the one unique right Satoshi gave us. Satoshi gave us the unique right to have a relationship with money without a counterparty. And so to dismiss that is to dismiss the innovation entirely.
Well, you're asking about, isn't the question, do concentrated positions like MicroStrategies represent, seizure risk or, I mean, it's funny how many of these arguments recycle, because among the arguments when Chicago was developing derivative products was, do you want a Mt. Gox honeypot type of situation where a government could, or a bad actor, or whatever, or rogue employees could disrupt that market? And that's why we opted, among the reasons we opted, for cash settled derivative products, and took a lot of heat for it. That's not real Bitcoin. Correct. It's not. Why do you want the Chicago Mercantile Exchange to have to warehouse a huge target? No, it makes a lot, I think the derivative products that have been successful tend, right, to not collect big Mt. Gox. That was the problem with Mt. Gox, is when Mt. Gox was the price discovery mechanism, the only exchange, the reference exchange for the project, yeah, that created an enormous amount of risk for the whole project, right? So no, I concentrated positions do create risk, but have done the way that we're doing it through regulated ETFs. I don't see that there's among the things there are to worry about with this project, seizure risk, creating a concentrated position that represents some type of seizure risk. That's not even in my top 5.
Yeah, that's the other thing. That's a good point. The other thing is, I don't think his comments are wrong in the sense that I don't think his position is representing seizure risk. But where I disagree with his comments is dismissing those that don't want counterparty risk. Like, here, let me tell you guys something. You guys know I try and lead from the front in this industry with transparency, honesty, authenticity. I don't own an ETF. I don't own any MicroStrategy. Like I said, Saylor's a friend of mine, and I think he's phenomenal. I think he's brilliant, genius in many ways. But I prefer my relationship with my money, my time, my energy, my effort, my labor, my future to have no counterparty risk. I prefer my sats cold, my sats on ice. That's the decision that I made. And so to dismiss me in that choice that I get to make uniquely with Bitcoin, by the way, there's no other monetary system that affords me that choice. I disagree with that. But if people want to have a different relationship with Bitcoin, in fact, I've worked my entire adult life to support the freedom of choice in this distributed network. And that's why we keep the block size small. That's why we go through the block size wars. That's why we fund developers in the ways that we do through OpenSats. And so but I don't think that MicroStrategy is doing anything wrong. And Saylor can exercise his right to use Bitcoin however he wants. It's just not dismissing those that are doing the same but differently, or implying that they're endangering the network or doing something wrong. That's where we disagree as men and adults in the only free market in the world.
Yeah, but like in a hypothetical future, right, where let's say between Coinbase, MicroStrategy, and I don't know who's another large institutional holder of Bitcoin, Gemini maybe or something, right? Um, in a world in which those three control, call it or own, collectively 10% of the network, like at what is there any point at which this becomes a centralization risk, or is it too sufficiently distributed for us to ever reach that point?
I think it's too sufficiently distributed for now. I mean, those that make future claims that are far out are borderline lying. I mean, nobody knows the future. That's part of life itself. But I think it's too distributed. I mean, Saylor makes the point. Part of the executive order and the confiscation of gold is because the dollar was backed by gold and they needed to debase the dollar. The dollar's not backed by Bitcoin. So you can ask the same thing of, oh man, are you nervous that the government's going to confiscate the biggest owners of Manhattan real estate? Probably not, because they can debase the currency without needing to violate Americans' property rights. Because if you overextend and you violate property rights like that, I mean, you're undermining the very value of the United States of America. And especially in such a time where the public's relationship with government is already so fragile, they don't need to confiscate anything to continue to debase the currency. So I just don't see the need to do that, at least for now. These are statements I'm making based on October 21st, 2024. And it is Bitcoin so sufficiently distributed. I've already said that in order for someone to build a position size that would be able to manipulate the market or equate to what we're seeing in gold, like half the supply, like if 50% of the supply was at Coinbase, I would say, okay, people should withdraw their coins. But we're so far from that. And the government doesn't need to confiscate Bitcoin to debase the currency. In fact, the government actively supports the appreciation in assets. The S&P 500, they constantly talk about is the American savings account, and they cheer on the fact that it's appreciating against the dollar. And so I don't think that they're going to go and confiscate those. In my opinion, I don't know. Honestly, as I'm talking out loud, I'm reminded of Kamala's policies of unrealized cap gains tax proposals and stuff. That's unique forms of confiscation in theory. But anyway, a Bitcoin executive order, no, is not a near-term concern of mine.
Well, isn't it interesting, though, that most of officialdom, with government's Wall Street executive, you know, address to this issue, they all share that type of top-down, like Jamie Dimon. If I were the government, I'd shut it down. No, and I'm sure he actually believes that. But how specifically are you going to shut down a distributed bearer asset? But that tends to be what they. Oh, another thing that Wall Street says, and might even be Jamie Dimon says as well, is what are you guys going to do when Satoshi comes back and makes another 10 million of them? Again, I mean, you don't understand Bitcoin without explicitly saying those words, because that's already been done. Charlie Lee did exactly that. He downloaded the Bitcoin code and changed one parameter, one metric, right? He made 21 million, 84 million, and did that like water down, dilute, slow down, or as he said, what are you going to do if Satoshi? What are you going to do if Satoshi disguised himself as Charlie Lee, came back and launched Litecoin? Now you got 4 times as many of those Bitcoins, and it doesn't water down. It's just a misunderstanding of the nature of this asset. But I think the one thing that just tells you immediately that you're going to get a stale argument is when they say, if I were in charge, I'd do this. Then you really don't understand the distributed nature of the protocol. It is resistant to what you would do if you were in charge of it. That's the frustrating nature of it. That's why it's so hard to add features to it as well, is because we got to get a whole bunch of, as you said, people that don't like coordinating, top-down coordination. We got to develop a consensus among those people. That's why Bitcoin is so resistant to any efforts to do that. I think it's, like I said, they all fall into that top-down category of, if I were in charge, I would do this to it, and that really ignores the fact of how well it's distributed. It was Bitcoin. 50% of the Bitcoins were mined before it had a monetary value whatsoever. Right? It was not worth a penny until the first halving. Right? I don't check my history. So that's just, you have distributed half the protocol to what has to be hobbyists, enthusiasts, and not, you know, monetary, um, and not necessarily the Wall Street world. When Wall Street sees this, yes, they want to manage it. I'm going to need, we're going to need who Satoshi is. We're going to need to control, the issuance and create products around it. But that's not how the protocol was developed. It's too well distributed at this point for those top-down concerns, those top-down issues to really concern me.
Yeah, I think an interesting point on Saylor and like just Bitcoiners as a whole, like Bitcoiners operate kind of like a wasp hive, and if you shake the hive or say something or do something that disturbs the hive, there's not a tremendous amount of context the wasps care about um, before they start stinging. And if the government were to do anything about Bitcoin to Bitcoin, in whatever facet that they could, public enemy number one is Michael Saylor. He like it, as like a sort of central point. What does the guy own? Like 158,000 of them or something like that. So if I'm Michael Saylor and people are asking me about the government, it's like, oh man, the dollar is great. What are you guys talking about? I just use this, as savings technology, but the dollar dominance isn't going anywhere. I'm like, and some people are like, oh, he must be a spook. He must be a spook or something like that. I don't know. I guess, just putting myself in his position, I would probably be a little bit more careful in my comments about the dollar, in my comments about the government, in my comments about the United States as a whole. So I don't know if that carries any merit, but people are like, oh my God, this guy is a spook and not a Bitcoiner, and I can't wait for it all to be revealed. And I don't know, it might just turn out that he owns a ton of them and doesn't want to shake any trees with the people that can enforce action against him. So I don't know.
Yeah, but like the guy at the bar that gives you a shoulder and knocks you down. And then what if your buddy was like, well, what if that guy's going through a rough divorce? And it's like, but yeah, but I don't know what's going through his head. And all
Right.
I know is my sovereign right to freedom of speech and property rights and the unique ability Satoshi gave me to own my own property. So if if you want to express your support for your regulator and your government, you could do that without dismissing and undermining my unique right of freedom of speech and property. I don't know. I mean, listen,
Yeah.
throughout my
No,
career,
that's totally valid.
I've erred on the side of, and this is what Bitcoin's taught me, is I've erred on the side of truth, honesty, integrity, authenticity, morals, and so it's just speak to me with plain English. I'm going to take your words as if you're being honest. I don't typically afford people my speculative opinion on whatever's going on in their personal life that they don't make me privy to. So, like I said, like I love Saylor, and he's been a great friend to me, and he's been great to Bitcoin. And adults are going to disagree in a truly free market. That's fine. But I do want to make sure that on this podcast, I'm protecting everyone's right to use Bitcoin in whichever way they want, especially the only way that's unique to this monetary network, which is self-sovereignly. Bitcoin empowers the individual, and it's a drastic oversimplification to call that crypto anarchy.
Yeah, no, I mean, yeah, I agree with that. I think on that. We got not a ton of time here, so I do want to transition to the European Central Bank, the ECB. The ECB came out with a scathing report about Bitcoin that touched on multiple different facets of Bitcoin and how they view it. We'll get into a few of those points, but I want to start with the fact that the ECB stated that Bitcoin, and I'm going to try not to bias this question because I think that this is so funny coming from a central bank, especially the European Central Bank. But I'll hold my comments to the end. The ECB stated that Bitcoin disproportionately benefits early adopters and creates wealth inequality. And so, framing this into a question for you both, do you think Bitcoin's design inherently favors early adopters, or is this criticism kind of missing a larger point?
I don't know where to start with that. I mean, yeah, the San Francisco 1849 gold rush really screwed over my family. I was not allowed to dig up as much gold as y'all were. You guys got there first. Everybody get whatever asset it is. You find the Hunt brothers find strike oil in West Texas. We all got poorer. I don't get. I mean, it's just a silly argument. Yeah, whoever finds an asset first develops it. Naturally, I guess, has a lead on the rest. I don't. What's the end game to try? I mean, I think that's oddly a recurring argument. Are we looking for Bitcoin is about equality of opportunity? Everybody has access to it. You don't need to have where I did not have access to Facebook's IPO, for example. I'm not an insider. I'm not in the venture capital world where I get tipped off, right? Where I can get an early round. That's what um the thing about Bitcoin is you did not need an invitation. It was simply posted out there for free. The fact that that method of introducing the protocol would, of course, naturally result in an unfair distribution of it, but that's the price, right? Of not, well, but there's also no pre-mine, no founders reward, right? No lockup that like you have to do if you want access to an IPO, or you want access to anything that Wall Street develops. You better be an insider. You want access to even buying government debt at a couple ticks better than the rest of us, you have to be a primary dealer. You're not, right? That's an exclusive club. So yeah, that's the trade-off. Satoshi made access to everybody. In one of the results of free and open access is a very skewed distribution. You can't have it, right. I mean, but
Yeah.
you can't have one without the other. You want equal distribution, then that has to have some top down influence, and it's not going to be as equitable. Or it's not. We're, as I say, the equity is in the opportunity. The equity is not in the distribution. That's by design, and I think it's one of the strengths of the protocol.
Yep. Yeah. I mean, I think, I mean, I don't necessarily have anything too new to add, but
Yeah.
I think approaching this, let's look at from first principles how Bitcoin is designed. How did Satoshi had to solve this problem of I created a new money for the people, but I have to distribute it. Imagine you are Satoshi for a second. How would you solve that problem? Would you say all the people that are 6 foot and up have rights to Bitcoin, or all the people that went to Stanford have rights to Bitcoin, or all the people in the West have rights to Bitcoin? How would you have distributed it? The solution Satoshi came up with is mining. Mining is the way Satoshi distributed Bitcoin. Now, what is mining? Mining is a free market process for energy contributions. That's what it is. So mining is fundamentally a free market process, and that free market process is for contributing energy to the network. And so I think the most fundamental point is Bitcoin's distribution is actually fundamentally not about privilege. It's about contribution. It's a free market to contribute to the network. And in return, you were part of the distribution, which, by the way, is still going on. I think the ECB's comments are so wrong. In fact, the opposite is true. Bitcoin's the only free market in the world that's enabled those that are traditionally excluded from other innovations. Because to my dad's point, early adopters in any successful innovation benefit. That is the property of any market. Anyone who is part of the gold rush, anyone who is part of an early investor in Facebook and Amazon and Apple, anyone who is early to Bitcoin. I can't think of any more fair and free system for those that are willing to take more risk and contribute more energy and value to an early innovation. And so I think that Bitcoin enables those that are traditionally excluded. You do not have to be a Silicon Valley venture capitalist with a lot of liquid capital willing to invest to have been early to Bitcoin. You do not have to be on Wall Street. You do not have to be a bank. You do not have to be a government. And it's about contribution, not privilege. So it is very unique that Satoshi found a way to distribute a new money through energy contributions as opposed to a university or a government or a central bank or an IPO. That is another thing proof of work solved for, was the distribution.
Yeah, and another reason to choose pseudonymity. And Satoshi chose pseudonymity, and once he felt the project was safely up and running, then he left. So there's that's your guarantee that I'm not going to get dragged into any argument about, block size or protocol. I'm not going to get subpoenaed by Washington and have to go testify about what my intentions were. Right? I didn't use my name, and then I left. That's another way, and I front loaded it. So you've got 50% of it distributed before it has a monetary value, and a mystery founder. That's about as safe as you can protect from any type of top-down interference.
Yeah, I mean, I take the position on this topic. I would like to see a stack rank of who's contributed more to wealth inequality, the European Central Bank or Bitcoin. I'd be curious who the winner of that argument is. The ECB went on to claim that Bitcoin's rise in value doesn't contribute to economic productivity. I thought this was an interesting point, and I'm curious. How would you guys respond to, or I guess a different way to put it is do you think that Bitcoin is more of a speculative asset rather than a driver of real world economic activity?
I mean, I think you get. Well, one of the real fun parts about debating that is you have a real world incubator, right, in El Salvador, right? How is that doing? Is wealth? Are the poor getting poorer and the rich getting richer? It seems not. It seems like they're building better libraries and universities, that they're using their nation's resources to really lift all boats, is the way. But I mean, like I said, we're going to get that answer as we get more test cases of, Bitcoin centric, more El Salvador's, more circular type economies that spring up. You'll get a better answer about whether Bitcoin drives income inequality. It doesn't seem to so far. It seems to just be a general getting the state out of the business of money seems to be a general rising tide lifting all boats type of situation, and not a driver of income inequality.
Yeah, well,
But
there's
if that's part of the result of fixing the money, is the rich get richer at the expense. It's just at the expense of who? I mean, you're just raising. All you're doing by eliminating, right? The banking system does not add value to our transactions, right? That's a hindrance, a fee, a regulatory, sand in the gears. I just do not see how, you know, how this protocol, if it does, if early adopters get a bigger lead on everybody else. I mean, that's a small price to pay for the solution and the benefits, right, that stateless money drives.
Yeah, I mean, I think this also reminds me of the Keynesian nonsense that there needs to be a central party to drive your desire to consume economically. It's so unbelievable. Like, people have a desire to consume things because they want to stay alive. People want cars and houses and food and water, naturally. They don't. If the central bank were to disappear, my desire to wake up tomorrow and eat and drink water wouldn't vanish. And so the idea that like a money empowers my desire to consume is ridiculous. I think the more fundamental question is, does Bitcoin empower humans to have a better tomorrow? And the answer is yes, right? When you talk about a money being debased despite the amount of productivity in today's world. I mean, Elon's launching self-driving cars and robots, and we've got AI, and we've got hospitals that are curing sicknesses like never before. And you're still losing economic value by sitting in your government's currency. So your government is issuing and printing more currency than humans are producing value all over the world. That's what that means. And so Bitcoin allows you, in my opinion, to be a net beneficiary of human innovation. It's like no one can debase your money, and you are a net beneficiary of the innovation and productivity and value that people all over the world are creating. There's nothing to do with, I mean, no central bank, in my opinion, determines if you need to or want to consume. It's so ridiculous. So, yeah, I don't know. I mean, I'd also be curious, like, who writes these?
Yeah, I think the last comment from this report is especially hilarious. You know, they go on to then suggest that you know, non-holders of Bitcoin should advocate for legislation to ban Bitcoin in order to prevent further wealth inequality. And my opinion on that is, you know, you've seen a group of people that have accumulated wealth, they can operate outside the system, and all of a sudden, whoa, wealth inequality. That, you know, all of a sudden, wealth inequality is a huge issue to you. If you wanted to, you know, if you really cared about wealth inequality, the first thing that you would look to ban is fiat. That's the first thing that you would look to ban. But you won't relinquish the control over your ability to print the currency. And so you're going to look at other things as a source of wealth inequality. Fiat is the single biggest driver of wealth inequality on planet Earth. But, you know, God forbid that Bitcoin thing gains any more traction. If you don't hold it, raise up arms and go and ban the thing. Absolutely insane comment to me.
Yeah, well, you know what's funny about both Saylor's comments and the ECB's comments is doesn't matter. That part of the innovation is there's nothing anyone can do about it as long as we, the network, the collective humans that run the nodes, that contribute to the software, that buy and hold the asset, as long as the collective network continues to enforce the consensus rules, continues to enforce the properties that we were gifted. So it doesn't. That's the other thing, is it doesn't matter. The ECB can think and want Bitcoin to do whatever it wants, but they can't do anything about it practically at the end of the day. Same with any CEO or bank or government, whatever. So I don't know. I mean, we're reacting to a nonsensical, stupid statement by a central bank, but it's important to remind people, especially that's new, as Bitcoin is the least violent thing ever. You don't have to convince anyone to do anything. And there's nothing anyone can force you to do. So this European Central Bank can think whatever they want. I sleep well at night because it doesn't matter what they think.
Yeah, agreed.
The two worst things any economic interventionist policymaker can come up with are the two that are like most discussed right now. We need tariffs. We need price controls. Okay, we need to ask the federal government how much we can charge for different. It is just, I mean, that's your top down status controlling solution to trying to control the utterly uncontrollable is how free markets price things. But that's, I mean, it is a really a surprising amount of status rhetoric just recycles back, and we should do this, we should control it. what is the Chase Manhattan thing? If I were the government, I'd shut it down. What happens? Why not create another 10 million? I mean, that's just an utter misunderstanding of how this distributed protocol works. But every criticism really does bear the same top down, like statist controlling instinct that seems to, I don't know where it is, it seems to kind of run amok in this in the financial world right now.
Yeah.
Yeah, I think that's a good way for our last scorching hot take of the week. A little bit more statist rhetoric coming from the Minneapolis Fed this time. Um, the Minneapolis Fed released a paper that argued that Bitcoin poses challenges to government's ability to maintain permanent budget deficits. Specifically, they claim that Bitcoin as a private sector security lacks real economic value and complicates fiscal policy by creating what they called a balanced budget trap. This trap would force governments to balance their budgets rather than allowing them to run deficits indefinitely. They even proposed banning or taxing Bitcoin to prevent this.
No, I heard enough. So wait a minute. The criticism is that a, a monetary protocol will prevent will prevent governments from running deficits or force governments to balance their budget in order to compete with it or in order to keep their their value from leaking out. Is that, I want to make sure I understood. Is that what this guy is saying? We can't allow Bitcoin because that's an attractive alternative to the way we're running things? Wouldn't the answer be just run your currency slightly better so it doesn't?
No,
Right.
no,
So
that's insane.
you don't get that leakage. I mean, that's it. Like I said, why are we noticing a theme? We don't. Why not? Let's. You're talking about a government who wants to institute price controls is the same government that wants to control the population by walling off borders. I mean, it is a very top-down state mentality that really did not exist. I cannot imagine the world I grew up in, right in the 80s and 90s, where the White House wants to insert themselves into how markets are working to the extent that these people do. I don't know. It just seems, it does seem like, another, here we go again. You guys are warning about income. You guys are warning about wealth inequalities. You're warning about, that is simply not how the federal government's interaction with the financial sector works. I mean, I don't think the government has the power to distribute wealth, per this per the Minneapolis Fed's concern. I don't see how that's workable in this country.
Yeah, I agree. I think you've referenced a few times the cyclical nature of the same talking points and the same arguments and the same misconceptions and the same misunderstandings. And I think just pointing that out to those new to Bitcoin is these cyclical cycles are adoption cycles. I truly believe at this point that this is how a distributed money globally gets adopted. Is you can't, with more demand, it's the only thing, you can't make more supply. So with more demand, you can't get more supply, you got to get a higher price. You're going to get your more supply from the market, from those that actually have the supply. If you want to get it out of the hands of those that hold it, you got to bid higher until they're willing to sell it. And so you're going to get a higher price and you're going to get new entrants, and those new entrants are going to have the same misunderstandings, the same misconceptions, the same tendencies. And so I do think that it feels like deja vu. It feels like the same old, but I actually think there's almost a science to it. I don't know how else a global money gets fairly adopted. I think I'm used to it at this point. I mean, what, Dad? This is our fourth epoch or something. And
But it didn't Petterfeed set the standard for that when he like I don't know 8 or 10 years ago wrote the op-ed. The guy the guy who runs Interactive Broker, so not a stupid person, somebody that understands financial district, wrote breathlessly about how these products and the derivative products exchanges are developing are a threat to the financial system, right? Not a threat to the people who are long, not like a Mount Gox type of threat. He was saber rattling that this protocol could drag down the entire financial system. I mean, it's been a constant I don't know why these people keep recycling, or why the fact that we're going on, I don't know, you and me, whatever, 10 or 12 years, the protocol 14 years, without any of the hiccups that, or any of the distribution problems, or any of the instability problems that we've constantly being warned about. I mean, other what, another 10 years with the protocol doing exactly what it does. It, as a peer-to-peer value transfer protocol, and it has presented no instability risk, the concentration risk, or, like I said, even the breathless "this is going to end Western finance" risk that we were told about, nowhere near um, come close to materializing. I mean, I think we're safe to ignore them at this point.
Yeah, I agree. And every cycle, I get further convinced that this is how Bitcoin's designed to be adopted. I even believe these blow off tops and these bear markets are almost a science as well. You have to get the thing high enough to get a new phase of distribution. Because think about it, there's a new set of people that demand Bitcoin. Where are they going to get it? You can't get it out of the ground. You can't get it from a bank. You got to get it from the people that already hold it. And I'll tell you this, I'm one of those people. I'm willing to part with some of my Bitcoin, but you might got to get it to $1 million first, right? So you got to blow it up really high, and then naturally the thing's going to fall. But what you've seen is it goes up really high and it comes down, but it always comes down higher than what it was before. And that to me is there's just more people in the network. There's more people that subscribe to the monetary policy that hold the asset than before. And that's just what I call adoption. So every single cycle, it goes really high, finds new distribution. That distribution is made, it comes back down, and then there's a growing number of Bitcoiners this time. But it's kind of the natural progression of this thing is people are going to come in because I was that person. People have differing episodes of it. It's almost like you catch the orange pill, you catch the disease, and sometimes it affects people drastically. And there's Bitcoin derangement syndrome where you end up and stuff, and then there's people that get it quicker than others. I think it has a lot to do with your ego, your sense of self, your ability to forgive, uh, a selfish, centralized fiat mindset. But in any sense, I think it's natural. I'm used to it, and it's why we do things like the Money Matters podcast, and we build companies like Strike, is a home for good education, authentic conversation, high quality Bitcoin focused products that are meaningful. So I think it's science, honestly. I think that the idea that we're done with these boom and bust cycles in Bitcoin and bull and bear markets, I think that's far from over. I mean, the thing's got to get distributed, and the new supply comes from the market. It's got to get up high enough, and then it's going to come down, and there's always going to be people new to Bitcoin, and you got to learn the hard way.
People have been trying to figure out how to price Bitcoin right since we've been coming on. Remember back in the old days, like, how do you price this thing? Well, it stores value, kind of like gold or real estate. So if it takes a certain market share from there, that can give us a head start on how to price it. Well, it also transfers value, kind of like Western Union. So it's a better version of that. So we can price it kind of maybe of a portion of the market value of an asset like Western Union. And I remember we go through all of those because people like comparables, and the frustrating thing for the financial markets, right, is that Bitcoin really isn't like it is. It is only Bitcoin is like Bitcoin, right? In that, with the distribution schedule, the deflationary, um, overlap with other assets, it really is a unique asset, which just makes it so hard for traditional finance to price, because right, they like earnings, because then you can apply a multiple that's comparable, right, to listed stocks, right? They like history. Bitcoin doesn't have that either. Been a really hard asset for the financial industry to price, and I think that's among the reason it has 80% bear markets. It has a lot of volatility
Yep.
as it matures.
Yeah, and I mean tying this back to the ECB again. I mean you talk about how we've already been through this. We know this because of what? Because we've put in the energy and the effort and the contribution to Bitcoin. I can't think of a more fair system and free market system than those that are early and those that contribute. and put in the energy and the effort get rewarded. And so I think that's also it's an optimistic, hopeful monetary system where anyone in the world can start contributing to the network and start gaining benefit for their contributions. It is not about privilege; it's about contribution. It's about time in the market. And so proof of work, literally. All right. I'm still on my European tour. As you guys can see, the sun set. I should have turned on some lights in my hotel room before I started recording. So I think with that, we'll start to wrap up unless you guys got anything else. No? All right. Well, Money Matters faithful, Monday mailbag faithful. We appreciate you guys. I read all the comments about my childhood stories, pissing on plants. I'm glad everyone seemed to like that episode. We're happy to switch it up, and I'm glad you guys did. Hopefully, you like this one. We're back to dollar bill. We're back to reacting to Bitcoin comments, whether it's from corporations or from central banks. If you guys want us to talk about anything specific, if you guys have any comments, feedback, suggestions, please leave them. You're never going to find a podcast more authentic, more honest, more integral than this one. We got no ads. We finance it ourselves. This is a family and friends podcast, and we do it for the truth, for the authenticity, for the fun. And so we read the comments. The relationship that I have with my customers and with the listeners of our podcast, I think is a one of one. It's so unique. I don't think you'll ever find it in another business or another forum. So don't be shy. Let us know. And we appreciate and love you guys.
Thanks, guys.
See you next week.